go across to the management of Suzlon Energy. They reported their numbers as well as there's an order win which has come in as well. They reported a strong growth in terms of the profits. We're joined by Himanshu Mody, CFO at Suzlon Energy, joining in with us this afternoon. And firstly, let's talk about, in terms of the numbers and your press release. What that is actually saying is that all balance sheet issues have come off and are in the past and have been resolved as well. Talk to us about what does the future hold for Suzlon and has the tide turned now?
Yes, I mean, the balance sheet problems, are definitely behind us. As you saw in the press release, we've reduced our debt significantly down by almost 90%, in the last few years to levels where we are about 1,200 crores of net debt. So we have about 1,900 crores of gross debt and close to 700 crores of cash on the balance sheet. So clearly the debt issues of Suzlon, which were due to historical reasons, are behind us. We are now clearly, as a management team, focused on from here on how we can grow the business strength to strength. And obviously, we can see that the policymakers are also supporting. They've realized that the wind industry has been in hibernation for some time, and there is a lot of policy initiative announcements in the right direction for the sector, which, as a sectoral leader, we are now well placed to capitalize upon over the next 2 to 3 years.
But let's talk about the order book. It's actually seen a substantial jump. If you could tell us what's the outlook that you have for your company's order inflow in the year or in this fiscal year, that's FY24?
So again, difficult for me to put a number on what we can expect. But as you rightly said, we have confirmed orders of 1,500 megawatts plus as we speak. Close to about 50% plus of those are for execution within FY24 itself. So as we go along and, we are in active negotiations with quite a few of our clients for large order book sizes. But we are right now, taking it slow, ensuring that we sort of are able to deliver on these orders. So as we speak for FY24, most of our capacities are sold out. We will now, whatever orders we take would be for FY25 onwards.
Right, Mr. Mody. Also, you say that, the focus is on profitability. Finance cost is also down 44% YOY. Is there scope for further reduction in terms of finance cost, which could further improve your profitability?
No, I don't think so. I mean, we've seen a quantum reduction in finance costs over the last 2 to 3 years. We won't see those quantum reductions. Obviously, we are in a regime where interest rates are firming up, and our debt reduction initiatives will be amortized through the cash flows that we generate rather than in an expedited manner. So I don't see any dramatic decrease in financial costs from here on. And of course, as we move along for execution of these orders, we will be also getting working capital facilities, which will have some nominal finance costs. So whilst the finance costs, yes, will reduce, but I won't say that it will be a steep slope downwards on the finance costs. We will certainly keep our eye on the operating margins and the orders that we are getting. We will make sure that they are at contribution levels commensurate to our internal norms.
Right. Your current net debt is around about 1,180 crore rupees. Is this going to be around that same level going forward, or can we actually expect a slide in your net debt position going ahead?
Certainly won't continue to be there. I mean, I'd rather, for this discussion, I'd focus on the gross debt number, which is close to about 1,900 crores. There'll certainly be certain reduction in that debt in FY24, which will be from internal cash flows. There won't, as we speak today, we don't foresee any corporate events such as rights issue that we did in the FY23 that helped us reduce the debt significantly. So whatever through our cash flow amortization through the year, we would be able to reduce the debt to that extent from the gross of 1,900 crores.
And you briefly just talked about in terms of the margins. Could you tell us a bit more in details? Where would the trend be headed? Also, what about the slow exports and international orders that we see?
So to answer your first question on the margins, clearly we will keep firming up our margins. As you can see from the FY22 and 23 numbers, if you were to compare, FY22 we did a high delivery of 808 megawatts, whereas in 23 we did 664. However, our bottom line in 23 has been much healthier, even at the operational level, which is a clear indication that we are being selective about the orders we intake, and that is in line with the contribution margin levels that we target. So far as export or international markets are concerned, whilst we have our eyes and ears open towards that direction, but currently we don't have any active orders from the international market space.
Okay, thank you so much, Mr. Mody, for joining with us this afternoon, giving us an understanding of what we should be expecting from the company going forward.